Have you ever considered investing in PepsiCo stock? Today, we're spotlighting this global powerhouse in the food and beverage industry. Known for its robust portfolio of brands from Pepsi to Doritos, PepsiCo has made significant strides in the market. But how does it fare as an investment opportunity? Is it a wise choice for those seeking stable dividends, or does it come with its own set of risks? We're here to answer these questions and more. So, stay tuned as we delve deeper into an analysis of PepsiCo stock. Getting to know PepsiCo, a multinational food and beverage giant. PepsiCo is not just a household name, it's a global powerhouse in the food and beverage industry. Founded in the late 19th century by Caleb Bradham, a humble pharmacist from North Carolina, PepsiCo has grown exponentially. What started as a simple drink formulated to aid digestion has evolved into a sprawling empire of diverse products. PepsiCo's core business revolves around its broad spectrum of food and beverage products. It's the proud parent company of 22 brands, each generating more than $1 billion in annual retail sales. This impressive portfolio includes well-known names like Pepsi, LAY's, Gatorade, Tropicana, and Quaker, each catering to different consumer tastes and preferences. This company's success is not limited to the United States. PepsiCo has stamped its presence in more than 200 countries and territories worldwide. Its global scale is a testament to its ability to adapt and cater to diverse markets and consumer bases. From fizzy drinks to hearty snacks, PepsiCo's products have a universal appeal that transcends borders. PepsiCo's impact on the food and beverage industry is profound. Its innovative marketing strategies, such as celebrity endorsements and catchy jingles, have set the bar in the industry. The company's commitment to sustainability and ethical sourcing has also garnered it a positive reputation among conscious consumers. A key player in the industry, PepsiCo's influence extends beyond its products. It's a major employer, providing jobs to thousands around the globe. Its philanthropic arm, the PepsiCo Foundation, contributes millions to causes like water accessibility, sustainable agriculture, and nutrition education. While PepsiCo's journey has been marked by success, it's important to remember that it hasn't been without challenges. The company has had to navigate changing consumer preferences, stringent regulations, and intense competition. Yet, its ability to innovate and adapt has kept it at the forefront of the industry. Now that you have a better understanding of PepsiCo, let's examine its stock performance. Scene script. PepsiCo's performance in the stock market has seen its fair share of ups and downs. Now let's take a step back in time and take a look at PepsiCo's stock performance. Over the past few decades, PepsiCo has demonstrated a strong history of steady growth. The company's stock price has generally trended upward, despite some periods of volatility. Remember the economic downturn in 2008? Like many companies, PepsiCo took a hit. But the company's diversified business model, which includes both snacks and beverages, helped cushion the blow. While other companies struggled to recover, PepsiCo quickly bounced back, demonstrating its resilience in the face of economic adversity. Fast forward to the past few years and PepsiCo continues to show its strength. The company has consistently delivered solid earnings, even amid the global pandemic. This is largely due to the company's strong brand portfolio, which includes household names like Pepsi, LAY's, and Quaker. But it hasn't all been smooth sailing. PepsiCo's stock performance has also seen periods of stagnation. For instance, in the mid-2010s, the company faced some challenges. Changing consumer preferences towards healthier options led to a slowdown in growth. This resulted in a period of flat stock performance. But PepsiCo was quick to adapt, introducing healthier products and making strategic acquisitions, which helped revitalize its growth. It's also worth noting that PepsiCo's stock performance has been influenced by external factors, like economic conditions and market trends. For instance, periods of economic uncertainty have often led to increased volatility in the company's stock price. But through it all, PepsiCo has remained a stable and reliable performer in the stock market. Its strong financials, robust brand portfolio, and ability to adapt to changing market conditions have helped it weather the ups and downs of the market. So, you might be wondering, what makes PepsiCo an attractive investment? Well, one of the key reasons is its status as a Dividend Aristocrat, but we'll delve into that in the next part of our discussion. So, stay tuned. Scene script. PepsiCo has earned the title of a Dividend Aristocrat, but what does this mean for investors? Well, let's start by understanding what a Dividend Aristocrat is. A Dividend Aristocrat is a company that is part of the S&P 500 index and has increased its dividend payout for at least 25 consecutive years. These companies are seen as financially stable and capable of generating consistent profits, which they share with their shareholders through dividends. So, how did PepsiCo achieve this status? Well, it's quite straightforward. PepsiCo has been able to increase its dividend payout for over 40 consecutive years now. This is an impressive feat that only a handful of companies have been able to achieve. It's a testament to PepsiCo's strong and stable financial performance over the years. Now, let's talk about the benefits of investing in a dividend aristocrat like PepsiCo. One of the main advantages is the consistent dividend income. If you're an investor who relies on your portfolio for income, a dividend aristocrat like PepsiCo can be an excellent choice. The company's track record of increasing dividends means you can expect a steady stream of income regardless of market conditions. Another advantage is the potential for capital appreciation. Although dividend aristocrats are known for their dividends, they can also offer decent growth prospects. PepsiCo's diversified portfolio of brands and its continued expansion into emerging markets can drive growth and ultimately lead to an increase in the stock price over time. Investing in a dividend aristocrat also offers a certain level of protection during market downturns. Dividend aristocrats have proven their resilience in the face of economic challenges, often outperforming the broader market during periods of uncertainty. However, like every investment, there are also risks involved. It's important to note that while PepsiCo's status as a dividend aristocrat is impressive, it doesn't guarantee future performance. Always make sure to do your due diligence before investing. Investing in PepsiCo, like any company, comes with its potential risks. Now, let's delve into the potential downsides of putting your hard-earned money into PepsiCo. To begin with, the stock market is by nature unpredictable and volatile. Market volatility can cause the value of your investment to fluctuate, sometimes drastically. This unpredictability is simply part and parcel of investing, and PepsiCo is no exception. The second risk factor is competition. PepsiCo operates in a highly competitive market, going head-to-head with other industry giants like Coca-Cola. While PepsiCo has a diverse portfolio of products, a competitive market can squeeze margins, and any shifts in market share can impact the company's bottom line. Another risk worth considering is changes in consumer behavior. PepsiCo is largely a consumer goods company, meaning its success is heavily dependent on consumer tastes and preferences. As we're witnessing, health consciousness is on the rise, and consumers are increasingly opting for healthier food and beverage alternatives. If PepsiCo fails to keep pace with this trend, its sales could suffer. Additionally, PepsiCo operates globally, which exposes it to geopolitical risks. Changes in regulations, tariffs, or political instability in the countries where PepsiCo operates can have a negative impact on its operations and profits. Lastly, let's touch on currency risk. PepsiCo generates a significant portion of its revenue outside the United States. This means fluctuations in foreign exchange rates can impact the company's earnings. If the US dollar strengthens against other currencies, it could reduce the value of PepsiCo's overseas earnings. Investing always comes with its share of risks, and PepsiCo is no different. Understanding these potential pitfalls can help you make a more informed decision about whether this stock fits into your investment strategy. Closing. Despite these risks, many find PepsiCo a worthwhile investment. Let's sum up. So, is PepsiCo stock a good investment for you? We've navigated the sea of information together, understanding PepsiCo's business model, analyzing the stock's performance, and delving into the significance of it being a dividend aristocrat. We also didn't shy away from discussing the possible risks associated with investing in PepsiCo. PepsiCo's diversified product portfolio, strong global presence, and consistent dividend payments are indeed attractive. As a dividend aristocrat, PepsiCo has a long history of paying dividends, which could provide a steady income stream for dividend hunters. But remember, every investment has a flip side. The competitive nature of the beverage and snack industry, potential regulatory changes, and global economic fluctuations could impact PepsiCo's performance. The key takeaway here is that investing isn't a one-size-fits-all approach. Your financial goals, risk tolerance, and investment horizon should guide your decision. Maybe you're someone who values consistent income and can stomach potential market volatility, in which case, PepsiCo's dividend aristocrat status might appeal to you. Alternatively, you might be seeking high-growth opportunities and therefore might want to explore other avenues. The decision, as always, rests with you. Research, analyze, and invest wisely, keeping in mind that the perfect investment portfolio is the one that aligns with your financial goals and risk appetite. Remember, every investment comes with its own set of risks and rewards. The information provided in this video or communication is for informational and educational purposes only. It is not intended as and should not be considered financial, investment, legal, or tax advice. The content is based on general principles and may not be applicable to your specific financial situation or needs. Always consult with a qualified financial advisor, accountant, attorney, or other professional before making any financial decisions or taking any actions related to your finances. Any investments or financial decisions you make are solely your responsibility. Past performance is not indicative of future results, and there are no guarantees of any specific outcomes or returns. While every effort has been made to ensure the accuracy and completeness of the information provided, we do not warrant or guarantee its accuracy, reliability, or suitability for your individual circumstances. We do not endorse or promote any specific investment products, services, or strategies mentioned in this video or communication. Any references to such products, services, or strategies are for illustrative purposes only, and do not constitute a recommendation or endorsement. You should conduct your own research and due diligence before making any financial decisions. In summary, this video or communication is not financial advice, and you should not rely on it as such. It is essential to seek professional advice tailored to your specific financial situation and goals before making any financial decisions or taking any actions.